Welcome to the Score Podcast.
If you're in consumer credit, unless you've been hiding under a rock these past few months, you know and have been warned of the end of the student loan forbearance period. Well, we are officially here, and payments became due September 1st. How do we get here, and what comes next? You've got questions, and we've got answers. I'm Jeff Richardson, host of the Score Podcast. We've been bracing for this moment for a while. Some 40 million federal student loan borrowers have not been required to make payments on their federal student loans for the past 3 years. The pause on payments was designed, quite effectively I might add, to provide much-needed relief for those financially impacted by the pandemic. Now, those payments are due. But what options do consumers have? Will these renewed payment obligations cause consumers' credit scores to decline? And what has the Department of Education done to help smooth the transition? We're lucky today to be joined for the second time by Dan Currell, who, as listeners know, is the CEO of the Digital Commerce Alliance. What you might not know about Dan is that he formerly served as Deputy Undersecretary and Senior Advisor at the Department of Education, which of course is the federal agency in charge of federal student loans, which is about a $1.6 trillion market, give or take. VantageScore partnered with Dan to develop a deep library of resources and information for lenders and consumers alike to help them navigate this complex and seemingly ever-changing situation. Dan, welcome back to the podcast.
Thanks, Jeff. Really great to be back on the show.
Dan, let's start maybe at a high level, a brief overview of how we got to where we are today. There was an agreement between the Biden administration and Congress on the debt ceiling that played a part in this. There was a Supreme Court decision. But what's all the connective tissue here as it relates to federal student loans?
Okay, well, let me try and give us all a 60-second potted history of how we got here. Federal student loans have been around for a really long time. It was really in the last decade or 15 years that they just exploded in terms of amount. And so that brings us, as you said, to $1.6 trillion in total outstanding debt. I'll just say the system gets a little more complicated, or has gotten more complicated over time, because you've got loans that were given out, decades ago, really, that are still in repayment. And then you got the new stuff. So it tends to become more complicated. And of course, as we all know, there's just been more kind of political talk about student loans in the last few years. So that leads us into talking about student loan forgiveness, and then comes the pandemic. As you said, we go on pause. Everything's frozen starting in March of 2020. And it only got unfrozen, looking at my calendar, 14 days ago on September 1st. The student loan forgiveness piece was that the Biden administration had said, hey, we're going to do $10,000 of forgiveness for most people, depending on some factors. The Supreme Court said, hey, you can't do it that way, right? They didn't say you couldn't do it at all. They said you can't do it that way. So on the same day, and the administration kind of thought that was probably coming, the administration said, hey, we're going to do some other things, and we'll talk more about that later, to try and achieve some of the same outcomes. And meanwhile, that whole system has still been frozen in time when that comes along. Well, when something changes in DC, a lot of times it has to do with the need for a budget. So Congress essentially says to the White House, hey, we want to strike a deal here. We want to get student loan payments started again. And in return, basically, we'll get a budget in place, which, of course, every executive branch wants to get. So that compromise happens. They agree. September 1st, the system kind of starts going again. And that means that first payments are due around October 1st for most people. So that is the Cliff's Notes on a complicated thing. Bottom line, though, is, the system kind of started operating about 14 days ago, and a lot of people are going to have their first payments due on October 1st.
Thank you for that, Dan. I feel like the past 8 months just flashed before my eyes in 60 seconds. But let's get back to payments due, as you mentioned. They became due on September 1st, and interest begins to accrue. And so I was wondering if you could explain that, but also kind of clarify the difference between that and when payments become due, and when actually payments become quote-unquote delinquencies, which are reported to the 3 national credit reporting companies.
Yeah, great. I'm glad you're asking about these details. They really matter they can be a little confusing. So I'll try and be as clear as I can. First, the system has sort of accumulated complexity, as I said. So it's not really the case that there are these things called federal student loans and they're all the same. There are some different types of federal student loan programs, and there are a range of repayment options for those loans. So the system's a little complicated. And I'll just note as an aside that private student loans are different. Some states have student loan programs too. Those are subject to their own rules. But when we're talking about the 1.7 trillion, we're mostly talking about federal student loans. And I mentioned that a huge explosion took place in the last 10, 15 years in terms of borrowing. So really the vast majority of borrowers and most money is what we call federal direct loans. That's most people. So if you listen to this, there's a pretty good chance, and you've got a student loan, there's a pretty good chance that that's what we're talking about. So here's the story for the vast majority of folks. First payments will generally come a month after the system started again on September 1st. So I'd expect a lot of borrowers to have their first payment due in the first day or a few days of October. Borrowers can go to their loan servicer website to see their account and figure that out. If you're not sure who your loan servicer is, that is not a surprise, right? You haven't paid in 3.5 years. And so the federal student aid and Department of Education websites have little tools that you can use to figure out who your loan servicer is. And in the FAQ we've put together, Jeff, we've got links to all that stuff. I will say on the loan servicer side, there have been delays in answering borrowers' calls, and I think everyone figured that would happen. Now, reactivating 44 million borrowers all at once, it's a challenge. And then I'll note that, payments have been frozen for 3.5 years. So you've got millions of borrowers who actually have never made a student loan payment before. So the graduating classes of 20, 21, 22, and 23, generally speaking, have never made a payment on a federal student loan. For the class of 2020, the first loans were dispersed in the fall of 2016. And so loans dispersed from 16 forward, many of them, maybe most of them, have never had a single payment. So if you're feeling a little rusty on, hey, who's my servicer? That's understandable. So we get to October, and what happens if you don't pay on time? You asked about this, Jeff. So generally, under these programs, you're delinquent when the payment doesn't arrive, on the day that it's due. If it's October 2nd or something, it gets to the 3rd, it's delinquent. Normally, delinquent payments would be reported to the credit bureaus, but you're not in default on the loan until you reach 270 days, or that's 9 months of non-payment. And under normal circumstances, that is very bad. It's bad to be delinquent, but it's not the end of the world. It's very bad to be in default. Very harmful to your credit score, makes you ineligible for other federal student aid programs, accelerated collection, like the whole loan becomes due, that kind of thing. Now, two things to note, though, that are really different because it's 2023. One thing I'll note is that VantageScore has been involved with, and I know you've been in touch with the Department of Education on the Fresh Start program. And the idea with Fresh Start is to let people back sort of into the system, to help people that have been in default get a fresh start on federal student loans, on payments and all of that. So it's kind of a reboot. It's a bit of an amnesty for borrowers who may have defaulted in the past. That's a Fresh Start. Then there's the on-ramp program. And I've seen folks saying sort of conflicting things online about this. So I want to just read exactly what the Federal Student Aid, that's the Department of Education, Federal Student Aid webpage, says about it. Here's what they say about on-ramp. To help borrowers successfully return to repayment, we created a temporary on-ramp period through September 30th, 2024. This on-ramp period protects borrowers from having a delinquency reported to credit reporting agencies. This prevents the worst consequences of missed, late, or partial payments. However, payments are still due, and interest will continue to accrue or add up. We will not report you as delinquent during the on-ramp, but we don't control how credit scoring companies factor in missed or delayed payments. Those are some pretty carefully chosen words from Federal Student Aid, and I will not speak for them. I don't work there anymore, but I think it's fair to say that, they're figuring out some pretty thorny details as they go, but they're providing some helpful protection to people with that on-ramp program. They go on after this to say, look, in general, plain English, they just say, borrowers shouldn't miss payments, right? If you're having trouble making payments, their big emphasis is the right move is to make sure that you're in the right payment plan so that you've got a monthly payment you can handle.
Dan, that's amazing information. As you mentioned, it is in the student loan FAQ that we've put on our website. The URL is www.vantagescore.com/student-loan. I'll recite that again at the end of the podcast. So you mentioned a few programs that have been subsequently introduced. Since the Supreme Court decision came out, The Biden-Harris administration hasn't exactly taken the resumption of these payments laying down. You mentioned a few programs. What have some of the other programs that have been announced look like, and what are they called?
Yeah. And I mentioned the payment plans piece before. That's one of, I would say, kind of three main things that they're doing. So let me talk about the three. The first of the three things that they're doing, and I think it's the most consequential in the immediate term, right? So if you're a borrower, you're listening to this, I'd say the thing that matters most right now is the SAVE repayment plan. And so it's like capital SAVE, all caps, repayment plan. That's a repayment plan that is designed to match the monthly payment to the borrower's income. And the department is saying pretty openly on their website and their public communications, press releases and stuff, that SAVE is probably the best approach for a lot of borrowers. Of course, it's not perfect for everybody, and they're very careful. It's the government, right? They're not going to say, hey, you should sign up for this. But what they are saying, and it's more than what I expect the government to usually say, is they're really pointing people to say, take a serious look at this. So under SAVE, borrowers will have a payment that's sort of calibrated to their income. It's an income-based repayment plan. And then they'll have the balance of their loans forgiven after a certain number of payments that sort of amounts to about 10 years. Borrowers can use an online tool that the Department of Education has developed to figure out if they should enroll in SAVE or another repayment plan, or maybe stick with their current plan. And again, we link to all that in the FAQ that we put together. So that's one thing, the SAVE repayment plan. The second thing that they're doing is just taking out chunks of student loans by forgiving or reducing balances under programs that really have existed in some cases for a long time. But for various reasons, the forgiveness sort of hadn't happened yet. The biggest category there is public service loan forgiveness, but you've also got some other things like folks that went to for-profit colleges that of a particular kind where there's forgiveness available and some other things like that. So yeah, I would say overall, if you're affected by that, you'll probably have been told already by the Department of Education that you're impacted by that. But it might be worth checking or looking for your loan. That said, they're taking out bits and pieces, and by that I mean like tens and hundreds of billions at a time in some cases. So we're not talking small amounts of student loans and forgiveness. But broad-based forgiveness was what they set out to do originally. It was $10,000 per person, in some cases more. And so the third thing I'll say they're doing is the Supreme Court didn't say you can't do it ever. They just said you can't do it the way that you tried to do it the first time. So the Biden administration is going to take another crack at doing broad-based student loan forgiveness that would apply to most borrowers. And, basically they're going to use a different method, relying on a different statute. And that method actually takes longer. And so it's going to be unclear what's happening there for quite a long time. And I will tell you that even having worked on this kind of thing before, I find it still a little opaque as to what's going on there, but they're definitely in action. There's plenty of evidence of it. It's absolutely, in motion. It's just not clear how long it's going to take and exactly what's going to happen.
Gotcha. So we've both mentioned a few times our robust federal student loan section of the website, which includes a really comprehensive 39-question FAQ. So for listeners, Dan, I was wondering if you could kind of break that down into how we structured that and what consumers, student loan borrowers, interested others will find in the FAQ.
Absolutely. Well, first of all, Jeff, your team was super helpful in making this thing happen. So big thanks to them. Second of all, in a way, it kind of got started. We were in conversation about the student loan issue and how it impacts people and kind of the VantageScore perspective. You guys have been great doing work on that. So I kind of went and said, hey, I felt like I should know exactly what's going on today because I hadn't looked at it in detail for a little while. And I got reading and realized, gosh, a lot of the information that's out there is just hard to understand, or it's misleading, or it's incomplete, or whatever. And so ultimately, I don't know that we set out to do this, Jeff, but we ended up writing, as you say, a pretty comprehensive review because I just said, gosh, I want an FAQ that will answer my questions, and it didn't exist. So that's what we did. We ended up, as you said, with 39 questions. There might be like 100 or more hyperlinks in there. Almost every hyperlink is to a government source. One of the things that I became convinced of as I was reading all the just massive amount of stuff on the internet, of course there is, it's $1.7 trillion question, is that the only really, really, really reliable sources are the government sources that say what their policy is because they're the lender here and they're the ones that are calling the shots. So we're looking at government sources and we broke it up into the following categories. And let me just kind of run you through, what the categories are and what we meant to do. Number one, we talk about student loan forgiveness. What happened? What hasn't happened? What's next? The repayment pause. What was that? It's over now. Ended September 1st. How did that work and where are we at? payment practicalities. So how do I pay? And again, like hyperlinks into how you can find out how you can pay or how you can figure out who your servicer is, et cetera. Different repayment plans, a huge amount of the complexity, but also I think the opportunity for people to better manage their finances has to do with what repayment plan are you on? You can have the exact same loan with various different ways of repaying it, right? Two people with the same loan might have different repayment plans, might have very different economics. So that's important. Payment problems. You asked about delinquency and default. So we go into that in some detail. What does it mean? How does it happen? What are the impacts? Other paths to student loan forgiveness. We talked about that a little bit too already. Like what could potentially happen in terms of other student loan forgiveness angles. Interest rates and costs. I don't think there's nearly enough discussion of this, Jeff, which is that there are very different interest rates for student loans in the world. And I think some of them are pretty, some of them are 8% or over 8% right now. So we're not talking about really low interest rates necessarily. And so it makes a difference, right? Borrowing limits. There is also a casual assumption that students can borrow as much as they want, especially for undergraduates. That is not true at all, right? There is really pretty low limits to how much they can borrow per year. And so we go into that and just lay it out. That part's actually not that complicated, but I think a lot of people don't know it. Parent borrowers, that's another area that doesn't get talked about very much publicly, but there's been programs for some time now where parents can borrow to pay for their children for undergrad or even grad school. And parent borrowers, have been kind of left out of the conversation. And I found the deeper I dug into the details there, it's complicated and a little difficult. And I know that there's a lot of parents out there who have significant balances and it matters to them what those details are. So again, a lot of resources there and links and answers. And then just kind of a catch-all of other questions, Jeff, that we ran across that I sort of accumulated as I was doing all this and going, well, I don't know if that goes in a single category, but questions that I know people are asking. So like, what's the CSS profile and what's this Perkins and Stafford and Pell and all that? And so a little bit of a glossary and answers to other questions at the end.
Thanks, Dan, and really strongly encourage everybody to check out the FAQ. And Dan, even the insights just on this podcast, I think consumers, borrowers, and lenders alike will find great value in. And thank you for your partnership on this issue. And I am sure it is not the end. This seems to be a fluid situation. And so we're going to check in again soon.
Thanks so much, Jeff. Just a pleasure to talk about it and great working with your team on this project.
As Dan mentioned, despite some setbacks, the Biden-Harris administration remains focused on helping student loan borrowers get back to repaying their student loans and preventing any major shocks to the system. That said, we're at the beginning, and these are debt obligations, and they do factor into how your VantageScore credit scores are calculated. With all the news swirling around, we wanted to provide a place on the internet that helps ground consumers with facts, answers to key questions without the jargons, and links out to where you can apply for the various programs and learn about them. And without any advertising or pop-ups. You can check it out at www.vantagescore.com/student-loans. Check it out. I'm Jeff Richardson, and I look forward to our next conversation.
The views and opinions expressed in this episode do not necessarily reflect the official policy or position of VantageScore Solutions. Visit VantageScore.com to learn more.